Choosing the right investment brokerage is an important decision. And in the era of zero commission trading, we must look to factors other than just cost to distinguish the best companies. We entrust our hard earned money with these brokerages, so it's important that we make the right decision. In this video, I'm going to share with you my thoughts on the brokerages that I've used, highlight some of the differences between each of these companies, and give you pointers that will help you in making your decision on which brokerage to use. So far, I have personal experience with Charles Schwab, Vanguard, Robinhood, M1 Finance, Webull, Fidelity, and Rowe Price. I'll be covering each of these brokerages in the order that I've used them, as well as two additional brokerages, TD Ameritrade and Interactive Brokers. By the end of this video, you'll know some of the pros and cons of each of these brokerages, as well as the information you may need in order to make the best decision for you. In this video, I'll be filling in this whole grid and provide you with my opinions to help you make the best comparisons. I'll give you the high-level considerations and you'll have to take it from there. Charles Schwab was the first broker that I use. There have been some changes since I left Charles Schwab, but they were and still are a great brokerage platform. Schwab is competitive on fees and in the ballpark of other well-established brokerages as far as margin rates go. Schwab offers phone as well as chat customer support, and many people comment on their great research tools such as viewing detailed company fundamentals, access to financial reports, as well as the ability to compare stock performance and financial metrics to comparable companies and industries. A person can accomplish a majority of their business analysis without even leaving the Schwab website. Vanguard is the index fund champion. Jack Bogel, Vanguard's founder, wanted to make investing less expensive. Jack brought the very first index fund to market and structured the company to be investor-owned, thereby ensuring the company's best interest is also the investor's best interest. If you have a philosophical preference for low-cost index fund investing and want to use a company who will have your best interests in mind, Vanguard is the best choice. Depending on your preferences, there may be a few things that could be considered downsides that result from the company being highly cost-conscious. For example, they don't have a real brick-and-mortar presence. Also, customer service wait times may be questionable depending on when you call, and stock research tools are definitely a bit lacking, which makes sense considering it's index fund-centric. Because of the philosophical stance of the company, Vanguard's low-cost focus results in it lacking features that other brokerages do provide. This is fine for people who want to buy index funds, but it isn't really ideal for other investors. Next, we have Robinhood. Robinhood is a bit of a fireball. It does some things very well, and it does some other things very not well. But it is undeniable that it is a game changer. Even if you never plan to use Robinhood, you should still thank it because most brokerages are now commission-free because Robinhood made them. Robinhood doesn't charge anything for stock or option trades, it has a very low margin rate, and an incredible mobile app. But sometimes you get what you pay for, and in the case of Robinhood, that's nothing. Robinhood has had a bit of a questionable past. Trading outages, failed high-interest savings account launch, negative press, GameStop trading halts, and a few other events have marred Robinhood's reputation. Robinhood, like many other brokerages, outsources order flow to another company, who makes money on bid-ask spread arbitrage. This process is called pay-for-order flow if you'd like to check it out in more detail. The specific manner in which Robinhood does this raises certain concerns. One thing in particular that I would like to point out is its option trades. Sure, Robinhood doesn't charge per option trade or per contract, but it's fairly well documented online that Robinhood will not get you as good a fill as other brokerages. What this means is that the same order placed on Robinhood may result in filling at a worse buying or selling price. Or the order may not fill at all when it would otherwise with a different platform. In all likelihood, paying 65 cents per contract with a better broker will actually save you money because you will get better pricing. I've even got some experience with this. In Robinhood, I've noticed that when I place a multi-contract option trade, I most often get filled right at my limit price. On the other hand, in Fidelity, I'm shocked at how frequently my short options get filled at a better price than I expected. I've traded hundreds of options in Robinhood and probably over 100 in Fidelity. So far, this has been my experience. Another big downside with Robinhood is that there's really no customer support. After I initially wrote for this video, Robinhood came out with telephone support, but I've not used it yet and I'm a bit skeptical. So, you might be wondering why anyone would want to choose Robinhood. Well, it's easy to use and understand. The phone app is incredible. It's seamless, intuitive, it is just elegantly simple. For those who trade options, Robinhood's option chain is the best in my opinion. Easy to read, understand, navigate, yet still provides all the information you need. Robinhood's instant transfers are also very nice, and like I mentioned before, Robinhood's margin rate is incredibly low. All of these things make Robinhood a very attractive and sticky product. Despite some of these positives, I plan to leave Robinhood. I just don't want to leave my portfolio in the hands of a company that I just don't trust. So, in the coming weeks or months, just depending on when it makes the most sense for me to make that transfer, I'm going to be moving this money into a different brokerage. A video will be coming out on that later, so stay tuned. M1 Finance works for a particular type of investor. I would describe it as a good solution for someone who wants to stay relatively active in the sense that they want to choose the individual companies that they would like to own and in the percentages that they would like to own it, but wants to take a step back and not have direct control over the exact timing of when these buy orders are placed. They want their portfolio to be managed by the platform so they can keep their allocations set to their predetermined percentages. M1 Finance is a uniquely passive approach to active investing, and it's known for its pie system. It certainly can be a great fit for some investors. If you think this might be for you, I recommend watching tutorial videos to see if it fits your investing philosophy. M1 Borrow offers investors margin rates of 3.5% for normal clients and 2% for M1 Plus members. The research tools, however, are a bit lacking. Some aspects of the layout are pretty good, and the basic screening filters are helpful, but it is definitely not a one-stop shop for stock research. In my opinion, the platform has two large functionality gaps. Orders are executed at one time per day in the morning, and if you're an M1 Plus member, one additional time period in the afternoon. This is not good for people who want to have more control over their account and want the ability to execute trades at any time. Next, M1 does not support options trading. These two drawbacks may or may not affect you depending upon your investing approach. Finally, I've listened to 2 or 3 long interviews with the CEO of M1 Finance. He seems like a terrific guy, and he's assured us that additional functionality will be rolling out to M1 over the coming months and years. But, like with any new brokerage, you're going to have to endure some growing pains. Webull is the third and final young brokerage on this list. It's especially known for its technical analysis tools and ability to be a comprehensive brokerage for active traders. Charles Schwab and Fidelity both offer active trader software, but Webull seems to be more popular in the active trading community. It has definitely grown in popularity, and I'm sure you've already been told a million times to download Webull to get 2 free stocks from just about every finance YouTuber out there. Webull and Robinhood are the only 2 brokerages that offer completely free option trading. I can't confirm this, but I'm fairly sure Webull has a reputation for getting better option fills than Robinhood. It also recently added multi-leg option trading capabilities, so if that is a must for you, Webull does now offer this. Even though Webull isn't the platform for me, I do have a close friend who is a huge fan. If you think that there's a chance that you might like Webull, I recommend you check out some tutorials. Fidelity is an all-around solid broker, and compared to the other brokerages mentioned on this list, it's most similar to Charles Schwab. Fidelity competes well in almost every category, and for how comprehensive its website is, it's very easy to maneuver. Fidelity is one of the only brokerages that does not use paid for order flow, which means that it does not generate income by outsourcing trades to market makers. This should tell us a lot about whose interests are truly kept in mind. I don't have extensive personal experience working with the customer services of most other brokerages, but I have used Fidelity's customer service a lot. I've called dozens and dozens of times, and I've utilized the online chat support numerous times as well. Wait times have been very good, and the Fidelity reps have been incredibly knowledgeable and helpful on almost any question that I have. I don't say this lightly because most companies' customer support departments are okay-ish at best. Fidelity is phenomenal. I'm happy investing in Fidelity not only because they offer a good product, but also because I trust them. Just like Schwab, Fidelity offers great research tools. I can get access to 90% of the data and information that I need when researching a stock without even needing to leave the Fidelity website. A lot of the information provided by Fidelity can only be viewed with a paid subscription when using other websites. The main downsides to Fidelity are that there's a bit of a learning curve when figuring out how to place certain kinds of trades, and the margin interest rates offered by Fidelity are not as competitive as some of the other lower cost options. Unfortunately, with greater functionality often comes an increase in complexity. I'll be covering Fidelity in greater detail in a future video. The last broker that I have experience with is Rowe Price. My wife's Roth IRA used to be with Rowe Price before it was moved to Fidelity. Of the well-established brokerages, Rowe Price offers the least value, in my opinion. Rowe Price has higher fees and worse rates in a few key areas when compared to most other brokerages. Rowe Price generates most of its revenue by selling actively managed mutual funds. Mutual funds are inferior to index funds in a variety of ways, so it doesn't make sense to choose Rowe Price on this basis. With limited research tools and little other value to provide customers, it doesn't make sense to open an account with Rowe Price in almost any case. The main plus with Rowe Price is that it's been around for a long time, so there's some level of increased credibility just because it's been in existence for a longer period of time. To this point, we've discussed every brokerage that I've got personal experience using. The next two brokers are so popular that they deserve a place on this list. The first, TD Ameritrade, is a great platform for people who want increased optionality and don't mind a little increase in complexity. TD Ameritrade is especially known for its thinkorswim trading platform, which has a ton of research tools, technical indicators, and other functionality. TD also provides helpful tutorial videos to help understand and use the platform. If you scour the internet forums like I have, when it comes to having the most robust trading experience, TD Ameritrade's thinkorswim platform is a clear frontrunner. Interactive Brokers is the final brokerage firm mentioned on this list. It is especially known for its incredibly low margin rates. However, this comes at a price. Rather than issuing a margin call and offering clients a couple days to liquidate securities or add funds, Interactive Brokers will automatically begin closing positions on your behalf. This reduces Interactive Brokers' risk, which is partially how it's able to charge incredibly low rates. For someone who understands this risk and keeps margin percentages reasonable, it may be a good option. Interactive Brokers also generates revenue by charging fees that a lot of brokers don't charge. Before I'd recommend Interactive Brokers to anyone, I'd make sure they understand the fee and commission structure. But if it's a good fit for you, Interactive Brokers might provide you a lot of value. To wrap up, when deciding which brokerage to go with, I think it's important to take a step back and look at a few big picture criteria. Number 1, fees. Does the broker charge reasonable fees for the service provided? Additionally, how might these fees, or lack thereof, be indicative of the quality of the product provided? Number 2, customer service and trust. You're putting your hard-earned money in the hands of your broker. When the crap hits the fan, you want to know you can pick up the phone and call a company that you trust. This is worth something. Number 3, ease of use. Is your brokerage platform usable? If it's so frustrating to be on their website that you want to gouge your eyes out, it's not worth going with this broker even if it's supposedly the best one out there. It's got to be right for you, and if your brokerage platform is super frustrating, it's not worth using. Number 4, personal preference. You may not like the same things that I do or have the same preferences that I have. Go watch some YouTube tutorials and see which brokerage platform matches your personality. So, to wrap up and in no particular order, my top recommendations for brokerages are as follows. Number 1, Vanguard. If your investing philosophy matches Vanguard's and you don't mind a slightly clunky website, you just want access to the lowest cost index funds, Vanguard's going to be a great choice for you. Number 2, Fidelity. Fidelity is an all-around solid brokerage. It's got great customer service and excellent research tools. I'd recommend it for almost anyone. Number 3, TD Ameritrade. Now, I haven't used TD Ameritrade, but from everything that I've learned, for a person who wants sophisticated research tools and just a robust trading platform and doesn't mind that increased learning curve, TD Ameritrade is an excellent choice. And if I were to do it all over again, I think that might be what I go with. Now, fourth and finally, we've got Robinhood. Now, it's a little hard to throw Robinhood on this list, but it's undeniable. Robinhood has a tremendous app, and the trading platform is unbelievably easy and user-friendly. As long as you go into Robinhood eyes wide open to some of their shortcomings, it has to make it on this list. Let me know in the comments what brokerage account you use and whether or not you're considering a switch. Thanks for watching. If you've made it this far in the video, don't forget to like, comment, and subscribe. Until that next one, peace.